Saturday, December 13th, 11:36 a.m. New York time. Welcome back, investors, to Winning Wall Street's Money. We're almost the middle of the month. Last month of the year, the last quarter of the year. And since we recently had the Federal Reserve for the past few days, had the FOMC meeting, and they lowered the rates by a quarter basis point. Yields, interest rates, have a correlation to currencies. So I'm going to go over the major currencies that are part of the US dollar, as well as the neighbors to the United States. The two largest trading partners are the neighbors of the United States. To the south, Mexico, and to the north, the United States. This is the US dollar index. It's 5 years of history, and each candle's a week. The US dollar index, the key word is index. Index comprised of two or more entities. So the US dollar index is comprised of several currencies. There's also the pairs. You might have a pair such as the US dollar, Canadian dollar, US dollar, Mexican pair. Well, those are pairs. Those are just two. The US dollar index that you could trade in the US markets, in the futures markets, the equities markets, and the options market has a US dollar index. That US dollar index, again, on my other videos, I mention which currencies are in there and what their weighted average is. There are other businesses that also have US dollar indexes, and they have other major currencies in there. I'll give you an example. I recall the Bloomberg index comprises of the South Korean currency, the Brazilian currency, in lieu of other ones that this one has. This US dollar index I'm showing you trades in the futures markets in the ICE exchange. There's more than one futures market. Again, it's a currency. The Federal Reserve also stores currencies of other nations, and those could change any given day. That being said, they are not correlated to this US dollar index. Since those could change any given day, the currencies the Federal Reserve is holding in the amount of them, that's a lot of data. So this index is solid, hasn't been adjusted for a long time. So back here again, looking at the chart, the bottom left, the lows from back in 2018, 2021, and the top, the highs of 2022. That's a big range the US dollar made. That was a bullish run up. That's momentum, the keyword momentum to the upside. After 2022, the dollar declined and went into consolidation for 2 years nearly. Last year, it did break out of that consolidation, went to a markup phase. The beginning of this year, we had a distribution. After the distribution, we had a markdown phase. Markdown phase decline. Momentum down, bearish. Got it? Markup is bullish. Distribution is bearish. Markdown is bearish. Now, the US dollar, down here, it's in a consolidation phase. Look at it. Where did it come from? It came from a markdown phase. So do you think it's in a accumulation phase or distribution phase now? It's in a consolidation, but is that consolidation having further distribution or accumulation here? If you're going to include fundamentals, well, that might give you a contrarian look than what the chart's showing. So current trend here, again, the last several weeks, the trend is down, lower highs, lower lows. We had a high here. This huge consolidation had a high here, spiked up. Those people got spiked out, taken out. Those were people that had working orders there to close, to buy back. Price went up there, took them out, and ran down. Went up here again too, minor consolidation up here. taking out those traders up there that were possibly bearish. And they have their stop orders there, meaning such as this blue line. See this blue line, horizontal line? That's a current swing high. It's a swing point. We had a turning there. The trend turned. So likely you have one or more traders, might be individual traders, institutions, that have working orders that if it goes higher, to close their trades because they're bearish. And as it's going down, they're making gains. But again, if it goes up there, they have money management on and don't want to stay in the trade to risk taking losses. Maybe they're break even or bigger loss, and they get out. So you have things that occurred called stop hunts like this. This likely was a stop hunt. Short squeeze. All those people that were short got taken out. And it went back down. Again, the momentum for the beginning of the year has been bearish. Consolidation, and the current trend is bearish again. Typically, when you lower, when a central bank, such as the United States, we call it the Federal Reserve, but it is a central bank. So this example here, United States, central bank, aka Federal Reserve, lower interest rates. That has an impact on the dollar. It weakens the dollar. When the Federal Reserve raises interest rates, historically has a strength to the US dollar, making the US dollar go higher. Again, correlation, interest rates, yields, currencies. So that being said, we're going to move forward. US dollar's bearish. Federal Reserve has been lowering interest rates. US dollar's bearish. You have less buying power. Interest rates are lower. You collect less income if you're invested in fixed income products. And those that are on the inverse, which I'm going to show you. So again, hear me. US dollar, you have less buying power. It's declining. And if you're putting your money, let's just say in a savings account, checking account, US treasuries, if those yields are declining, which they are, you earn less interest. So where do you invest your money? You don't have to just go in the stock market. There's currencies you could invest in. There's commodities you could invest in. Or you could be degenerate and invest in crypto and has history occurring just like penny stocks did. All right, let's go to the next. So now we're back here on the major currency pairs. 5-year chart, each candle's a week. The euro pair, the euro, US not, US dollar. So when the euro trades higher, that's bearish the dollar. Well, here, look at the 5-year history. Very similar to the inverse of the dollar. So the euro has been bullish. Here's the low of the year. Here we are now, markup phase. And look what happened this past week. Huge, strong candle, strong body, bullish candle. Broke out of this consolidation, up strong. I'm bullish the euro, and that's part of my investment portfolio. Been buying the euro on the dips. Different accounts for different method tradingologies. Again, this is not part of my day trading account. I'm talking about investing, buying and holding. And you can add it to doing the equity or the options. It's been working out well. Japanese yen. Again, 5-year history. Look at the decline it's been on. And then here, past 2 years in this consolidation phase, yes, it's been trending. Prices fluctuate in the markets. See this low down here, 2024. And then the low this year, 2025, was here. So that low here never took out that swing point. Huge consolidation. And the past few weeks, we had the low of this year almost occur to take out the prior low this year. Again, the low of the year right here. So we failed to take it out. The big wick on the bottom, buyer stepped in. We had an inside candle. And the inside candle, we broke above it. Well, I'm interpreting this as accumulation And I've been adding it the past few days to my investment portfolio. Yep. Don't know when I'm going to have a big return. But again, I'm interpreting this accumulation, and eventually we'll have that reverse trend momentum to the upside to become a markup phase. So I've been buying the stock ETF. The stock ETF symbols are on my post, on my Patreon page below. Let's continue to the next. British pound. Also, the momentum's to the upside. Here's the low of the year. You can see we've been making higher lows. Looks like it's gunning back up to the highs of this year. Australian dollar. Yep, here's the low of the year. Again, very close to the highs of this year. Australian dollar, Canadian dollar, New Zealand dollar. Those countries are heavily weighted in commodities. Yeah, they're diversified countries, but again, more weighted towards commodities such as metals and energy. Strong gold, strong silver, it helps the currencies. Well, dollar is at record high. Sorry, gold is at record high. So I'd rather be invested, which I am, in gold, silver, instead of some of these commodity-based countries that are, because the returns have been better on the gold instead of trading some of these currencies I'm just showing you related to the commodities. Canadian dollar. Look at this green zone. It's back acting as a key level in the past. Down here, was demand zone buyer stepping in, broke below it, closed below it. That was making it as a selling resistance. Then again, this year we broke above it, which was interesting. Last year, broke below it. Strong move up in here, retracement, high of the year, markdown, and didn't stay that long below this prior green zone. So again, bullish Canadian dollar. And we'll come here to swing point. See how that works out. Again, higher chance it will run up to the highs of the year. Because you see big reversal, man. Big strong green candles here the past several weeks. Swiss franc, what's considered a safe haven currency. Again, it's up strong here. A lot of chop up here. Big move this past week. So now we're on Mexican peso. This past week, Mexican peso made a new high for the year. Look at that dodgy candle. Dodgy candle means indecision. Dodgy candle on top of a trend, potential reversal. Reversal, be a pullback. If you're bullish, you look to buy on the dips. Second largest trading partner in the United States. Weaker dollar, stronger peso, you pay more for imports. Second largest trading partner to the United States. Chinese yuan. So again, this is a currency pair. This trades on a different exchange. This trades on a Forex exchange. When this declines, that's weaker dollar, stronger yuan. This past week, the Chinese yuan, look, made a new low for the year here. But again, I told you it's the US dollar, Chinese yuan. So again, that means the US dollar made the new low for the year against the Chinese yuan. Yeah, US dollar getting weaker against the Chinese yuan. And also this, the past few weeks here, we had this huge consolidation, inside candle, impulse move down, very bearish dollar, strong yuan here. So on a retest, if it occurs up here, might be an opportunity to reload if you're trading bearish. Yeah, a lot of big panic move down there. Dumping dollar. Now, for those that are trading crypto, Bitcoin, here's the low for the year, very close to it. Here's the high for the year. We had a distribution phase up here. We're in a markup phase, mark down phase. I ran a Fibonacci, the top of here, this trend to the bottom there. This week, as well as last week, we tested the 0.382. Both times filled to close above it. Rejection. And this green candle, this last week, big wick on the top, small little body, bearish pin bar. I'm expecting more bad declining prices into Bitcoin based on the charts. Now, in the run-up from last year to this year, a lot of it was marketing, hype. You have lobbyists represent the crypto industry. You have lobbyists that represent single cryptos. Again, they gave campaign money, donations to politicians, even had those politicians endorse them, politicians invested in them, politicians that this year are in the government help impose regulation. They change regulation, letting a lot of these cryptos get to be traded also the companies on the stock exchange so they can raise capital to pay back the shareholders, the top shareholders, the early investors, not necessarily invest in the company to continue growing, which, again, that's a form of shadiness. But again, you could change regulation because that's what leadership could do. And then again, it could come back and bite you years later or that same year. Again, it's not consumer protection. It's called greed and selfishness. Remember the real estate bubble? Remember the bond market? Maybe you don't remember the bond markets. Yeah. That was in the late 70s, early 80s. Okay. So now I want to go to what's called multiple time frames, show you some deep insight. Do the US dollar first. 3 grids, far right monthly, the middle weekly, and the left daily. Same currency pair, the US dollar index. So look at the far right, the monthly. A lot of red, bearish dollar down here. Current month, lower low, lower high. I already showed you here in the middle, the weekly. And here we're on the daily, dollar. Sure, Friday closed inside candle. Again, you see where the Federal Reserve cut the interest rates and that huge panic selling red candle went into this zone. I'll open up so you can see it on the daily chart. Again, this was the demand zone here, this green area. We tested it here multiple times. Weakness up here. It wasn't strength. We had that huge impulse move down on that day, further low. Yeah, weak. And we took out the swing point right here, that blue one. Makes sense. We had a pause there. Again, the momentum's down. Let's go look at the euro now. Again, same thing, 3 grids, monthly, weekly, daily. See on the far right, monthly, big strong candle up. Middle chart weekly, big strong green candle up. And the daily gapped up on Friday, up strong, took out this swing high. Wow. Big demand for the euro. Again, swing point. People had their stops up there. These people that were bearish, the euro, making gains when it went down. If they didn't close it for profits, shame on them. Look at this W pattern here. Big move up here. Again, short squeeze. Those shorts were wrong twice. If they reloaded again here, well, again, dumb money. It happens. Let's take it to the other one. Oops. We're looking for the yen now. There we go. The monthly, look at this inside candle. We're almost in the middle of the month. The yen still hasn't taken out the low. So again, potential reverser. Again, I'm looking for a bullish move. Weekly chart, I already showed this here. And the daily chart, also Friday, gapped up, took out that swing point. Yeah, I know it closed red. But again, look at these higher time frames, the monthly and the weekly. Yep. So we get a pullback. On weakness, I'm looking to reload to add to my bullish position for investing. And let's take it to the final one, the British pound. The second currency of Euro in the EU. I mean the Europe. Yeah, the monthly, again, reverse already made. Higher high, higher low here on the monthly. And on the weekly, you can see here, big wick, top, bottom, might be a potential pullback here after this momentum up. And the daily chart, Friday, lower low, lower high after nearly a bearish pin bar up there. Again, this is bullish. At this big move up here, retracement, midpoint, tested midpoint, reverse, strong, and test midpoint in that big green candle. So again, another likely reason I say expect to go higher. Thank you as always spending this time with me. That's it for the video. Thank you for watching.